Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Let's see if it sounds a little bit better here today. Also, at the same time, what did I do? I dipped the input part into some alcohol and let it dry, and it should be doing a lot better. So let me go to the chat line and see if anybody says, "Oh, I can't hear you." All right, let's see now. Where's the chat line? Hello, chat line. And let's get the charts up there too at the same time. Where's it at? There it is, except minimize. Let's move that over like so. Where's it at? Right there. And let's see. Where are we at here? One more thing. There we go. And let's switch. Oop, not that. Let's move this down like so. And let's switch over so you can see the charts. Where's that mouse at again? There it is. And there's the charts. And let's get that up and over. There we go. There we are. All right, we're getting there. And we think we'll see what the resolution looks like, because we worked on that resolution this morning with Janos. Let's see what that looks like at the same time. Let's get the headphone set actually on him instead of me holding on to it. And let's see if anybody says, "Hey, it sounds better today." It's spinning, it's spinning. Okay. No noise yet, but I think it does look better, and maybe not. I don't know. Can anybody tell if the resolution looks any better? Let's see if we widen that. See if that helps a little bit. No, it doesn't really help, does it? Let's try that. There's actually room for me to put the old spreadsheet up there at the same time. We might have to start doing that also at the same time. Let's see. Where do we go from here? All right, and that's oil. Let's take a look at the Swiss now. All right, there. We have it up on J4X. I did put it up there, so that's cool. And there is the Swiss. You can see holding up a little bit stronger there on J4X. I'm sorry, on Chicago Quant, and on J4X. You know, the white line is very firm above the dash line. You see this little pop that it gave us in the volume, and now it's dropping again. So I guess what's that trying to tell us? And that is, as this rises, less buyers are coming in, which is kind of curious in its own right. Pablo, how you doing today? Smith, hi. AFA, hi. Good to hear you. It's clear. Yeah, I put it in the liquid, and it seemed to clean up. So Pablo says, "Hello, Doc. It's looking okay." Oh, good. I changed the resolution. Giannis and I were talking about it, and I went into the old one that I had because I got that computer working again a while back, and I use it to watch now on the to be able to see the Ducascopy. Like, I'm signed in as MIMMR or something like that. Sometimes I'm signed in as Chicago Quant. Sometimes I get signed in as MIMMR. In this case here, I see it's MIMMR, and it's all okay. It's looking good. This is a positive thing, you know. Looks good to me too. It does. And as you can see, the Swiss, I guess they're running away from the Swiss a little bit, or running towards the dollar. How could they not? The whole world is upside down when it comes to all this noise, you know. There's a lot of noise going on out there, and there's no other way to describe it. It's just noise. So, we have that situation now. There it is. It's wide now. I wanted to get the dots back in there a little bit clearer, and you can see we are above the trend here again. The trend line seems to have reestablished itself a little bit higher, and we're going to learn from that, of course. with the inflation factor going on, and interest rates more than likely they'll raise it a half a percentage point, and we're going to just see how they play it out. I think that they're going to stall out in the threes. I don't think they're going to go to 4. It wouldn't surprise me if they go up to 3 3/4. So you figure they do a half here. That makes the Fed somewhere around 1 or something like that, I guess. And then they'll push it again. And, if they do 4 or 5 of them, 4 of them would put them up into the 3 percentile area. And then 5 of them would put them in the 3.5 percentile area. We'll see. But I don't think it's going to be too much of a challenge to understand what the governments are doing. How do you see the euro for the next 2 hours? Let's take a look and see. Let's take a look and see. We do have there's a chart there. We can do this one. We have a Euro Swiss 5 minute. We're going to turn that into the euro for 2 hour. Settings. Where is it at? 2 hours. Hour. Make it 2. And let's see what that does. Oh, and we got to change the product to it at the same time. And that is the euro against the dollar. Euro against the dollar right there. Here we go. Here it comes. We need to put more time on it. All right, let's go back further. Settings. Let's see what that does. Maybe I went back too far too fast, so let's do it this way. Let's just go to 6 and then go from 6 to 8 and something like that, and we'll just try to go back a little bit further. So let's do 5. There's 5, and then let's do 7. Go back 7 days, and there we go. There's 7 days. Let's go back. It's not going to change much. You're going to see that our math picks up things really quickly. So what happens is that I go to 9 days. You're going to see the same characteristics. See? All the characteristics are the same now. So went into a cell. I'm going to go into the cell. Went into the cell right there. When was that? That was the 5th. Where are we at now? The 7th, right? Yeah. And so then we went into a buy there. We got the volatility signal in there. Intradays, these volatility signals are a little bit stronger, In other words, you could jump on the volatility signal. Then we went into a sell again there, which is what? Last night at noon yesterday. And then we went into a buy right there. There's the buy. And then it went into a buy-sell again. So, let's see, right there. Into a sell there. You went into a sell on that move around an hour and a half after the Swiss, London, Frankfurt, Amsterdam, the European Open, Milan, everybody, Spain. And you can see right now we are flirting with a buy as we speak. Let's see how much time it has left to go. So that ended at 8. This is going to end at 10. And so where are we at now? We have an hour and 20 minutes. But it looks like there's some strength coming in. This is the way we look at it. I'm the one underneath we were playing with, because there's no weekly to this, obviously. And so this was what? Is that an RSI? Or that's the fast stochastic? Or we were looking at some things to try to enhance it. Someone had asked the same thing a while back. And we were playing with some ideas. I'm not really sure if they're worth exploring at the moment, but and I guess we could do this. We could go move it down, move this up. But there's your action right there. How's that? Does that help out long term? It looks like it's trying to lift up here. Notice that it's done it before over these couple days. It gets up into this what's that, 109.38 area. This one is 109.35-ish area. So, and we're at what, 109.91? Is that right? What is that? That's 10. 109.34. So we're at 109.13. So I guess there might be 20 pips in this thing with this type of action we're seeing right here. But remember, this is the early part of a 2-hour event. So, you know, it could roll over. You know, it's not if it was 10 minutes away from closing. You know, I would say it looks like a good opportunity to try to ride something up 10 or 15 or 20 pips. But with it having an hour and 18 minutes to go, it could roll over pretty easily. How's that? I hope that helps you. I see it long, but more certain of Euro AUD if it breaks the 145.88. Well, we can do. You want to see that? AFA? We can put that up there. What was that? The Euro AUD on a 2-hour basis? Take a look at that. What was that? Euro AUD? Or AUD Euro? Okay. AUD Euro. Or Euro AUD. Where's that arrow? Right there. There it is right there. Let's see what that does. Now that does look stronger, doesn't it? It'll fill in a few seconds. There you go. So it went into the buy. That's interesting. So it went into the buy right here and caught that really nice ride up. Let's see. The sell was right there, and it was really bad, wasn't it? Or was it there? Let's see. What was that? That is 0. Plot 4 is 0. So it was all 0. Let's do this to fix. Okay, there you go. Cancel. All right. So the manifold was really tight. Let's see if we can widen this a little bit for you, like that. And you can see it went into the sell here. I guess it is. No, it didn't go into a sell there either. So the sell really came right here. And then it started to bounce back up with our white line cutting cleanly through the manifold. And I'm curious to see what this thing looks like with a 3.5. Why don't we put a 3.5 in there? Matter of fact, let's put the 3.5 in down below and get rid of all these others. Format, indicators. Let's see. And we do have a 3.5 in there. And let's get rid of this. Let's see. No, not that. Like that. Let's go like that. Yeah, let's do that. And can we do that? Let's remove that. And remove that. And remove that. Okay, and then close. Move this up. You can see it went into the sell here and is flirting with the buy now right there. And again, that's in the same situation with that Euro 2-hour thing. Let's see, second and more. Now let's take a look at it with a 3.5 super. And there it is with the 3.5 super. Let's just double check, but I believe this goes to property 1. Let's just see. Properties 1. Yep, okay. So in this case here, you can see the manifold. Obviously the manifold's the same because it's a 3. But you can see here it went into the buy right here like that did. So let's just go like this. We're going to extend this. So went into the buy right there. And we're going to widen this too so you can see it. The 3.5 super, in many ways, the blue line can act like the weekly, So in this case here, it tries to get into the buy here, but then when it finally lifts through here with the blue, if you can see the blue shadow there, maybe we'll make it a little bit thicker or something like that. Style. Maybe something like that. Does that make it thicker looking? No. I guess that's about as best as it gets. Can we adjust that? No. There we go. So how about if we make it a little bit darker? Is that any better? Now if we make the bars white, style. There we go. And then let's fix this histogram here. Make that white also. and then make that green, like so. There we are. So you can see here, we go into a buy here, it doesn't let go. It stays in the buy. Now here it falls into the sell with just a plain 3, but with a 3-5 super, it keeps it in the buy still. And you can see it's and the same thing, it's a little bit better trender, isn't it? Now, where was it? Was it here? No, it was, yeah, so they both fell into the sell here. And go like that. Yeah, there we are. They both went into the sell on that, which is, you know, too bad. The euro had gone in the sell a bar back. Euro pairs dollar. You can't see the right screen. Oh, I see what you're saying. Yeah. Let's do this. Let's move this. Let's do this for a moment, like that. How's that? There you go. There we are. Is that any better? And let's move that over a little bit too at the same time. And let's move that over like so. Let's see if that does it. This should make it a little bit better. Okay, how's that? It still needs to be moved over just a little bit more. Like so. There we go. Check this out. Now you can see all the numbers too at the same time. So you can see there the intraday is trying to turn it up. You can see that. That's pretty comfortable. And using the 3-5 super is probably a little bit more accurate. You know, just because it acts like a weekly, the blue and the of the super. You know, whereas we look at gas line 3, there's no weekly underneath it, no longer trend to compare it to. So, what else can we say about that? I guess that's about it, isn't it? It's does that help out? Anybody want to see anything? Just shout it out. We will take a look at it. Sip of my tea. Now we can shrink this back down, and it might. Let's see, and you can see the dollar against the Swiss, and we'll just jump back to our rhythm. But if anybody wants to see anything, we will jump back into the that product line there. As you can see here, now we're looking at the euro against the dollar on a day and weekly basis, and you can see it has broken down, and by the end of each day they find a way to knock it down again. Now they're firm here at the moment. Let's see, on a short-term basis, the gas line 3 is breaking through the time manifold, so there is some strength coming in. And the weekly is still hovering around the zero line, but not above it like it started off on Monday and Tuesday. And then over on J4X, you can see the same thing right there. And you can see there just days and days of weakness. With the hinky Ashkeys, we have it's at 5 days down, and same situation on Chicago Quant. We have 5 red days down, and it's with a volatility signal trying to kick out here at the moment with a green and a red right there. And just give you a larger view of that for a moment. Where's that at again? We'll push that button so you can see a larger view. There you go. This way the resolution thing doesn't mess with you guys too much. And so there's the euro doing its cute little dance of trying to get stronger, but it's not really getting stronger, but it's flirting with it. You can see it here. It's an up candle going on and all that, and the manifold being challenged, and the weekly has weakened compared to what it was Monday, Tuesday. There we are. Now let's drift over to, and remember traders, you're allowed to interfere and say, hey, I'd like to look at X or Y or Z or whatever, and we'll go look at it. Everybody chooses to see something, you just get in line. You ask for it, I go hunt it down. After I'm done with you, I go on to another one. It doesn't matter to me. But what I do normally is just go through a bunch of the same products every day, to get a flavor of what's going on. Compare it to the J4X, showing you how well the J4X can model with our math, and then we go from there. So let's take a look at cable now. See what the cable's up to. And tomorrow I think we're going to do a webinar. Giannis was saying we should do a webinar explaining how to read all these things, and that's what we'll do. Is we'll get a little bit more in depth with it tomorrow. Unless you ask now. If you ask now, I can practice for what I'm going to do tomorrow. And let's get the cable up on Chicago at the same time, so you can see both cables and their actions. You can see here, this thing's been banging around, playing with the bottom end of the range right there. Just give you a larger view of it at the moment. There it is right there. And you can see that it's the weekly has still been in a weekly sell for weeks here now. We went into that weekly sell back up in here, up in the that was the close of that week right there. That's how that works. That's the close of the week. So it went into the sell in this somewheres in this area and stayed in there. And before you know it, we were in a sell. And it's been a sloppy type of action, but it's still much lower than where it went into the weekly sell, and that's usually the way it works over time. So now we shrink that back down. You go to J4X and you can see, same situation. Lots of red hinkies, exemplifying this weakness that we have been going on on our system there. And then at the same time, you see the white line been pierced underneath. You see the volume has been dropping and the product has been dropping. All right, all good there. Excellent, excellent. And from there, we drift over to the Turkish Lira and see what that's up to today. Take a quick look at the dollar Turkish Lira there, and you can see it's trying to lift up again. Not taking the top end of the range or anything, but when we look at it on the Chicago Quant, you'll see it's banging up against our top end of the range itself. It's been basically tied to it right there. See that we have this big giant rectangle and black dots there. Emphasize it there for a second, give you a better view. That's a good question, Pablo. That's a really good question. We've gotten to the point now where fundamentals are a secondary factor. The QE and the Federal Reserve and the rest of the planet are trying to move back towards some type of fundamental, but evaluate the fundamental news in your daily operation. Probably more than anything else, I've learned over the last, since QE got going in 2008, the best thing of all is when there's news coming out, stand it aside. Neutralize your position. If you're a institution that has a position on, you can neutralize it with binaries and derivatives and options and things like that, and then jump back into the position after the news is over with. Janos had created a video about that, a couple of videos over time about explaining how to trade fundamental news and how basically fundamental news has drifted away from the norm since quantitative easing. And so, what it really comes down to is that you don't really use fundamental news anymore to make a decision. We trade proactively by technical analysis. Technical analysis has become extremely more accurate than it has ever been in my lifetime since 2009. Since the 2008-2009 QE adventurism. There's no doubt that the central banks are, as we say in the markets, buyers of last resort, and so they follow a lot of trend lines, and they follow a lot of Fibonacci, and they follow some parabolics and that moving averages. They follow a lot of that stuff, and it seems to be way more accurate than it's ever been before. Is it perfect? No, but my math is my math has always been this accurate, so it hasn't had much of an effect on my math. If nothing, the Fibonacci, when I put it, when I show you things like, or where is it at? Let's say like the British pound, and we're looking at the Fibonacci range here. Let's emphasize this for a second for the Fibonacci itself. And you can see the green right here is the 50 percentile. That's the 100 percentile. And if we, let's just rewind this for a second like that. You can see the top end of the range right there, where it plays that for a while. And it's been playing with this range now for like a year and a half, 2 years. And the inflation seems to have been having an effect. But maybe we've seen ranges evolve and stay. You can see here it gets to a point where it bounces off important Fibonacci areas. There's the 0.618, like right there. You can see, the green line is the 50. The what is it? I'm sorry, no, the blue, the yellow right here. We should probably make these things a little bit thicker. And they are the yellow is the 618 and 0.38. So you can see they bounce off of these lines pretty accurately, which is kind of odd. See how it plays with the 50 percentile there 3 times in a row. The accuracy of technical analysis has become incredibly more predictable, which is really odd. You can see it park itself on the was it the blue is something like the 2-3 or something like that. I think that's what that is. And then you can see here there's the bottom of the range. So fundamentals are not really more than just something see, before quantitative easing in 2008, fundamentals could go on for hours and days. Literally, news came out, everybody was looking for it in one direction. It happened. Sometimes they'd sell the news, buy the buy the rumor, sell the news, and you could see it play out over a couple hours or days. Now, since 2008, the fundamentals have kind of disappeared, and now they last about 2 or 3 minutes sometimes, and that's it. That's what makes the binaries a good tool. You put a position on, and you're trying to play the fundamentals. You barely get your execution off. If you do a binary, it does the execution for you. Buy the binary a few minutes before the news comes out, and then it execute. It gets long on its own and gets out on its own. And so the fundamentals have been kind of washed away, unfortunately. It's the biggest fundamentals, I guess, like employment and so forth. Even that doesn't seem to last. None of it seems to last. I guess you could say the fundamentals of the Federal Reserve or the central banks when they raise rates, which is very rare. Over the last 14 years since 2008, they've at one point under Mr. Obama they raised it 1/4 percentage point once over 8 years. Talked about it every quarter how they were going to raise it. So for 8 years, 4 times is 24 times they said that they were going to raise rates. And they raised it once out of 24 times over an 8-year period. So Mr. Trump got elected, and they raised the rates a week afterwards. And then they kept on raising them again all the way up. He kept on saying, wait a minute, for 8 years you wouldn't raise them on Obama. Now you're raising them on me. And so, there's definitely a political effect going on there. And at the same time, this quantitative easing, which was supposed to end after a few years, is now here 2014. Or no, we're at 22. 2022 right now. And quantitative easing is just now being discussed about because of the inflation kicking out so strong. Now they're going to try to stop it. Well, we'll see. So fundamentals is more of fundamental technical analysis than it is fundamental news and information. Now on stocks, you can see the fundamentals do have a lot to say, but again, prices are inflated, and in the last 2 years we've seen the Federal Reserve balance sheet go from 4 trillion to 9 trillion. So it's a massive jump, hence the inflation. All right. Where were we at? We were Turkish Lira, right? Yep. So let's go take a look at the Euro Turkish Lira. I hope that answered your question. Euro Turkish Lira right there. And let's get it up on the screen here on Chicago Quant. Right there. There's Turkish Lira there. And you can see here, when we rewind this, There, it's been inside its little range now for a while. It's doing a fine job. Matter of fact, I think I said yesterday it may be becoming time where we need to Fibonacci the box. So like right there. And as you can see, it bounced along the 50 percentile, traded almost up to the top of the range a couple of times, and is now hanging on, what is that? That's the 0.23. And then the yellow right there is the 0.618, and the green is the 50 percentile, and then vice versa. There's the 0.382, and then, or I guess this is the 78. The blue up top there, that's what that is. It's sitting on the 78, and then the blue down at the bottom is the 0.23. So, thanks, Doc, for your answer. Oh, I appreciate it. I'm glad to give you my 10-cent opinion. I always enjoy doing that. Now let's just take a quicker look here. You can see we've been in a sell with this for the last couple of days. There's a warning sign there. It dropped underneath the 0 line. That's how we measure it, just like over here on J4X. It drops below the dashed line. That's like the 3-dimensional 0 line, and you get your weakness, and with the red hinkies and ASCII bars, giving you the warning that the pressure is on the downside. All right, from there we go to the Canadian. Let's see what's up with the Canadian this morning. Oil's firm a little bit compared to yesterday's selling, so I would imagine, imagine they'd be flat to up a little bit. You can see there it is flat to up. It bounced off the 50 percentile. Again, there's that odd fundamental technical analysis. The technical analysis has become a really good tool. Now, like I said, my math is not any better or worse for it. My math picks up things a lot better than everything out there. So I can't complain. It's a godsend. And I'm just happy. But how else can you describe it? I guess the fundamentals now are technical fundamentals, not economic fundamentals, which is a real disappointment. All right, you can see here we're on a second day of the buy right there. Oh, what did I do wrong there? I moved something somewhere. What did I do? I must have moved. I see what I did. Say if I go like that, format gas line 3 and move it back down property wise to 2. There we are. Now we got to move that down to the bottom. Let's move that over to the bottom. There we are. There we go. We're back in the saddle again. And we can move that up. And this way you can see that. So you can see we went into the daily buy right there yesterday, and it's showing the strength. But our weekly is still in a sell from up in here. I guess right there. So maybe with oil, let's just show you oil real quick like a bunny. There's May oil. You see May oil is up for the day. You can see it's green. It's up like $1 or something like that. But it's still in the sell. It went into the sell over in here. This is like that triangle. I think we had that on the back month. I had a triangle drawn out on it. But you can see there's, let's just do it again on the back month. And we're banging on the bottom of it, of the triangle. I'd imagine there's just sideways action going on the oil. Probably vacillate between the low 90s or right around here, and then try to move up. That's what it seems like to me. You can see we are really flirting heavily with that weekly sell, as down at the bottom there. You can see that, and let's contract that. And we've been in the buy since the 70s. Was it the 70s? 69, 70, something like that, and then it ran way up, and then now it's doing this triangle thing, which means it's digesting. Like you've eaten too much food, you digest, let it distribute out, and then it starts to find a new. You get hungry again, and in this case here, that's where we're at. So I guess the best way to describe it is let's see. I think it's a nowhere market at this point. It's a product that everybody wants, everybody needs, but I don't think it's making a new decision until we see some more dramatic situations going on in other places in the world, especially poor Ukraine. God bless them. Live for freedom. I hear you there. And so that's what we have going on at the moment. That's exactly what we have going on. Now, let's see, from there, we take a look at gold. And there's the gold. And gold was down yesterday, but it's up again today. But you can see we've been in the sell on that since here. And it really has not been anything. More like a loser. You really couldn't take the short because of, we're in a weekly buy. But now, this week, we are flirting with the sell. So if it closes in that sell, and we're in these daily sells, then maybe we get ourselves more action downside. Now, I would love to see, like, the green line, try to move up to this manifold in here. And then, roll over. Let's make that bigger for a second, just to emphasize a little bit clearer. So, if we could only, unfortunately, it's buried down here, so I'm not always a big fan of going short, even with it in the weekly. One thing's for sure, I know not to be long, but definitely not short. It's more of a neutral situation, and that's probably the best way of describing it. So, from there, we go over to the south. Oh, we didn't even show you Canadian. Let's show you Canadian on here. There's the Canadian. So you can see, that 2-day thing with the green bars, just like the 2 days right there, with the Chicago Quant. You see J4X doing a fine job. You can see this white line, to a great extent, has been screaming to try to buy all the way back in here. So, it kept on trying to warn us, but with all this red, you couldn't take it too serious. And now you've got the green developing. This is kind of a very positive thing to see this break through like that. From there, we go over to the South African Rand, because we had gold up there. There it is. Where's the South African Rand? You're here somewhere. There you are. You see the Rand has been moving up with gold going down, which is pretty normal. And let's put it up over here. There it is. You see we flirted with the sell. Did we go in? I think we went into the sell yesterday. Yeah, it closed in the sell last night. And now we're trying to perk up again after being in a buy. But this thing's been also in a weekly sell for a while, telling us that gold was going to be strong. Went into the weekly sell up in here. So, it went down pretty well. We thought it was going to stall out in this area here, so it's gone even further. How much that has to do with inflation is hard to say, but it obviously has some influence. At the same time, gold has lost its short-term luster, I guess you could say. Can't be too short-term when you really think about the idea that the Russian army was moving through the largest European nation and has everybody on pins and needles, as they would say. So, all right. So from here to South African Rand, with gold moving sideways up. Well, it's moving up today. Let's put it up on the screen here real quick on J4X. There it is. And it's trying to, you got a green here and it's trying to lift, but you can see the numbers are still rolling over. And then when we look at it here, same situation. In the sell, just like J4X. But not really going anywhere. This is probably the real story. The way it's burying itself on the weekly. All right, from there we go to the currency that will not be named. Excuse me, like Baltimore in Harry Potter. It's backed by gold and oil now, this particular currency. I'm not sure what we're going to see out of that, but it should stabilize it on some level. Okay, that's right. J4X doesn't have that. We're going to just move right over to the Yenski right there and just show you a quick picture of it here. The currency that will not be named. You can see here it's playing with the 80 area, 799, and we are flirting with the daily sell, and we're still in that weekly sell since they connected gold and oil to their currency. So we'll see what that does. Maybe just that stabilization. You know, it's so hard to say when you try to understand things through the fundamentals. You know, the story and the financial fundamentals. That, you know, when you stabilize something like this, you know, it probably has some effect across the world. You know, it has to have some effect. You know, all these currencies are connected to each other on one way or another. All right, from there we jump on the yen, as I said, and you can see it on J4X there with the greens being up for 5 days now. You see the white line here smoothly moving up and comfortably. Give it to you a little bit bigger on the Chicago Quant so you can see it much clearer. Same situation, you know, a bunch of green dots for 5 days and a red volatility warning there. So it's been in the buy, and the weekly is very firm. It's been one nice run. So, you know, at this point in time, you know, I'd have to assume it's a combination of inflation and interest rates. You know, again, that's like the currencies. They're all influencing each other. They're the only fundamentals that seem to be. And let's see, one other one. The other fundamental that does stick out is earnings on stocks. You know, when there's earnings on a company, they jump on it like white on rice. You know, like a bee on a plant, you know, on a flower. So fundamentals, there's a few financial fundamentals that still exist, and that is earnings, and then obviously interest rates on you know, some of these products change their trading range itself. Alrighty, let's see who and what is next. Let's go take a look. From there we jump over to North America to the Mexican peso. Right there. You see it's come off its, you know, bounce. Let's just give you a really good view of that, because this thing's been very fascinating too. You know, the way it plays with the fundamentals of technical analysis and the range itself. You can see it. There's no doubt about it. People who are the institutions are trading these things on a indicator fundamentals. You know, on the technical analysis fundamentals, not the financial, you know, earning. You know, people used to trade currencies. Let's put it this way: people would trade currencies by employment numbers, by interest rate minus inflation, by, you know, consumer price index, you know, watching the inflation side of it, producer price index, watching the inflation side of it. These things had strong influences. Their numbers were watched like, you know, like the sun going up and down every day. It was there. And now in these times, those things don't really have much of an effect. It's more of what the central bank, the range that the central bank wants it to stay in is what the range it's going to be. And that's the odd part about it all. So, all right. That ends our little adventure over on the currency side. But you're welcome to ask to see any particular currency, and we will jump on it. And what we do now is we run over to the metals complex, and we take a look at the metals complex. So you can see there's the gold acting a little bit firmer today, but the dailies are very weak there, and the weekly is weak. You know, so it's not exactly something you want to go running towards as much as you would want to, thinking, my God, the world is on fire. You know. And then you can see here on J4X the same situation. It's trying to tell us that there's no conviction out there at the moment. You know, it's trying to just go sideways to nowhere like that. Look at that. And then, and I guess in many ways you could say this looks like some type of reverse head, like a head and shoulders, not a reverse one. That's like as if they're going to try to do another leg down. And we go look at silver here on J4X. There's silver. And silver is broken down below that 24.55. We're at 24.34. 55 seemed to be a really strong resistance area for about 6-7 months. And it would hit it and then drop. But now you can see here, you know, our work's doing the same thing. It's been in the sell since that bar right there, and there's been a lot of pressure, but we're in weekly buys, so it's been really hard to want to be short it. One thing's for sure, you don't want to be long it. When you're in a sell, you want to be neutral. And so, or if you're in binaries or options, it's a whole different story. You won't get stopped out. Can we see Btc Bitcoin? Sure. Right there. You can see we've been in a daily sell since here. Or was it one over more? Right there. So we've been in a sell since here. It was an interesting buy. Went into the buy here, and we were in a weekly buy. Now, it put us into a sell after, I don't know, 8 or 9, 10, what was it? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. 11 days in a buy, and it went into a daily sell there, but still in that weekly number. And you can see it moved up, but still found a way to be lower after 4 days or 5 days. So, that's what the daily does. It keeps you out of trouble. What is up with this thing? Close. There we are. Let's see. William says Brent. Let's take a look at Brent. We don't get Brent on anything but J4X, but that's okay because of the indicators we developed for it. You can see the pressure's been on that too, and you can see the white line is breaking down again right there. Make that just a little bit bigger, and you can see when the white line drops below the dashed line, there's pressure, especially with the red hinkies combined together, and vice versa. When they go green and this thing's above its zero line, there's no doubt that, or in this case, it's the dashed line is the zero line. That's why I call it the three-dimensional. And you can see the pressure is on it. Then it topped out again here on the Brent, and a little strength there from the green, but didn't last long, and now we're back in the weakness. Unfortunately, we don't get Brent on our work. But just looking at the J4X, it says to us that the pressure is there, but it's that triangle again. We're seeing that triangle pattern. So with the war going on in Central Europe, I guess you could say, or the biggest country in Europe, I guess you can say is that they're basically taking a break. I think that's what you're seeing. In other words, the money is said, okay, let's see what the next turn of events is. And and obviously, if the Russian Federation's troops get pushed more and more, or they retreat to more to the edges, then I would assume things will smooth out more, and we'll see lower priced oil. But I don't think it's going to go too far down, just solely because we're in that era now where things are changing, energy-wise. Germany's starting up more nuclear power plants again that they turned off, and same with the rest of Europe, realizing that the two most cleanest things is natural gas and to cut carbon out of the atmosphere for whatever reason. That's their objective, and so natural gas and nuclear power is the best way to do it. So that is, I guess you could say that is the real good awakening from this whole thing. Unfortunately, that is the story there. All right. From there, we go over and take a look at natural gas, which has been very, very firm. There it is. There's the American natural gas right there. You can see it's been on a super duper run. And over here, let's see, natural gas right there. Same thing, except for now, yesterday, oh, look at that. They're starting to put pressure on that thing from yesterday. I did not see that. So it's pushed into a sell. Let's put that in there. And you can see it's up a little bit today. But the weekly has been in a buy since over here, since the $4 area. So, I mean, we're up into the sixes now. So, and this thing is way up. There's no doubt about it. But I don't think I'd want to be anything but neutral in a daily sell. I would not be short unless you're doing it through options or binaries, because this way you wouldn't get stopped out. Enough time, so forth, will usually pay off. what else can we say? I guess that's about it when natural gas goes. Now, we do get natural gas out of Europe. It was up into the 28s yesterday. So I'd imagine it's sitting at the edge of it, like 27 highs, 28 lows. Let's see where it's at the moment. Where is it? Gas euro. Gas euro. Gas euro. There it is right there. 28.45, still pushing hard, and the white line is piercing through. So they're still trying to figure out what to do about the energy situation there in Europa. You know, that's, what is that? We're trading at 6, it's trading at 28. So what's that? 6 times 6 is 36. 5 times 6 is 30. So it's trading a little under 5 times what it trades for in America. No wonder they want to fill ships up with it and send it over. I would too. What an arbitrage that is. Indeed, indeed. What else can we say? I guess that's about it when it comes to the energy complex. Anybody want to see anything else, just yell it out. If not, we'll go over to the metals complex. And there is gold. As we said, you know, it's flirting with the upside, but still in that sell. And playing with that weekly thing right there. Let's put it up over here. There it is right there. You know, it looks like a head and shoulders, like they want to break it down. So, and here it's almost like a head and shoulders too, but I guess maybe this is a reverse head and shoulders with that, right at that point. Silver. Silver is hanging out underneath that 24.55. You see it's 24.34. So the pressure's, yeah, you know, one moment they're buying it, the next moment they're not. You know, it's silver has that odd tendency. It's the cheap gold, I guess you could say. But in the end result is it's not really doing anything good. Again, I think metals are misunderstood anymore. I'm convinced of that. I think that they're really a long-term investment tool. And I don't mean like 2 days or 1 week. I think it's more like 2 to 5 years, 5 to 10 years type of thing. All I know is every time I look at my gold, it's higher overall from where I purchased it years ago. And as I dollar cost average into it. Now I'm up in here. I will wait for weekly sells and let it go down and then pick up a little bit more when we turn into a weekly buy, but it's on a very small basis. You know, in the 17 and 18s, I didn't load up, and I don't load up. I just keep on nibbling, treating it like a long-term investment, like decades. And when you're looking at it at you know, from basically 350 and then, you know, 500 and then, you know, 1,000 and so forth. You know, when you're looking at trading at 1,900 and change, you know, I say to myself, well, this works out real well. But if you're thinking that you're going to see that in the, let's say, the weekly or monthly, it's not that good, you know. So, okay. So, where am I at this point? Metals. Okay, let's look at copper. Right there. And you can see copper, I thought it went into the sell yesterday, but now it's popped. It's changed, and now it's just flirting with it today. So we'll have to go in and double check that. They changed the numbers in there. Let me just go see how we sent it out this morning, because I could have sworn it was different there. Let's just grab a hold of it. Let's move this over. right there. And right, where are you? Copper. Next to gold. There it is. Yeah, we were through this morning. So we'll have to double check those numbers. Let me just take a quick look somewhere. Go to the exchange itself and see what they have as the quote. And see which one is right. Sometimes the brokerage house breaks away. The data feed goes awry. And that's May Copper. And May Copper closed at, what do they have it there? They have May Copper closing at 473.80. 473.80. Let's just minimize that for a minute. And it closed on there at 473.80. Okay. So yeah, that's accurate. So what we'll do is we'll remove that and then put that up in here like so for today. Interesting. It happens like that sometimes. Data gets changed by the exchanges. It's very odd. And then the brokerage or the data feeds take a couple hours to straighten it out. So like this morning it was fine, and then bang, it changes. So there we are. You can see the copper is trying to break down. You know, we're going to see the weeklies doing the same thing. You know, over here on let's just put it up on J4X. There's copper. You know, 2 days in a red too. You know, I mean, it's trying to tell us that there's weakness. And then you can see here. That is correct from I just checked the exchange, so they've changed the data at the exchange itself and it straightened this out. So what we have here now is, you know, if it stays like this, it looks like to me, you know, it'll close in the sell there, so forth and so on, and the weekly's showing some weakness there. And you know, we've been in the, where's it at? Come on, mouse. We've been in a weekly buy since all the way back in the end of December in the 430, 440-ish area. So, all right, I guess that's about it, traders. We've come down to the end of our adventure. The market's getting ready to open up in here in the States. So everybody have a safe and smart trading day, and we will tomorrow be doing a little bit more on our mechanics of how to read the charts. You know, we'll take a look at them a little bit more in depth. And anybody have an example they want, we will show it. So happy trails to you until we meet again, all you trading cowboys. Happy trails to you, to all your trading friends, and Dukascopy. So ta-ta for now. Doc over and out.